morning, everyone. We are Group 2. Our topic is the effectiveness of technical indicators, and I will talk about the portfolio summary first. Here is our trading plan. Our weekly profit target is 0.65%. The stop loss order will trigger at 10% loss. The maximum portfolio rate per stock is 15% in a bid to lower our risk by diversifying our portfolio. To determine which stocks to be invested, technical indicators shown below are used to analyze our stock. A long position will be taken when at least two technical indicators show buy signals, vice versa, and time filter of 2 days is set to confirm our analysis. And for our performance, our trading period is from 13th February to 17th April. We have invested in 10 stocks with 25 investments, in which including 24 times involved a long position and only once involved in a short position. Among these 25 investments, 7 of the investment gain profit. The win-to-loss ratio is 7 to 18, which is 28%, and our total portfolio loss is 7.32%. For the comparison between market performance and portfolio performance, this graph shows the weekly cumulative growth of Hang Seng Index and our investment portfolio, the blue line representing the market portfolio, and the red line representing the portfolio performance. We can see that the blue line is always higher than the red line, which implies that the market performance is better than our portfolio ones. And we believe that the bad performance is resulted from ineffective of the technical indicators, existence of expected events, and behavioral bias. And here are our best fee and worst fee investment. The best one is 2382 Sunny Optics, and the second one is 2018, and the third one is 1928. For the worst fee investment, the worst one is Tencent Holding Limited. The second one is Geely Automobile Holding Limited, and the third one is also the investment on Tencent Holding Limited. And for the methodology, we have set 2 criteria to measure the effectiveness of technical indicators. The first one is the stock price goes in the same direction as we expected by 5%. And the second one is the stock price reached 75% of the price target after the formation of particular pattern. And for the assumption, we have 5 assumptions, and they are shown here. After talking about the assumption, I will pass the time to Leslie to talk about the effectiveness of technical indicators.
Thank you, Iris. In the following, I'm going to talk more about the use of technical analysis. The first one is basic tenet. Basic tenet involves forecasting and evaluating the direction of the trend. Investors should also alter their investment strategy when the stock price penetrates the trend. Based on our analysis results, this indicator has been used for 5 times, and 60% of them are effective. Let's take a look at the effective example, HSBC Holdings. The stock price bounces up when touching the uptrend line. However, sometimes it is not effective. When the stock price touched the downward line, the stock price didn't drop but penetrated downward trend. Also, there is a way to increase the accuracy. Basically, the use of trade volume in basic tenet is a strong evidence to support the trend. Referring to the HSBC Holdings, those candlesticks are close or even touch the upward trend with the sharply increasing trade volume, and then the stock price bounces up. To balance the risk, using basic tenet can indicate the existing point for investors to minimize their loss. Take Country Garden Holding as an example. Given that you short sell based on the downtrend, and when the stock price penetrates above the downtrend line, it would be an alarming signal to remind you to buy back. We can see the stock price has rising for several days, and we show that it can help you to minimize the potential risks. For the use of Fibonacci retracement, there are 5 key Fibonacci ratios, and the most significant Fibonacci retracement level is the 0.618, which is the golden ratio, and the 0.618 retracement level tends to be the maximum pullback on an uptrend. According to the analysis result, this indicator has been used for 3 times, and only 1 time is effective, and the percentage of win ratio is 33.33%. Take Sands China as an effective example. Every time when the stock price close to the golden ratio, the stock price would bounce up. And also, there is a way to increase the accuracy. If there is other support level or resistance level on the golden ratio, which is a stronger support power, we look at the Sands China. The support line is nearly equal to the golden ratio, and the stop line is when the stop price is close to the support line and the golden ratio, the stop price bounces up immediately. For the candlesticks, The candlestick indicate the impact of the investor sentiment on stock price and determine the buying point and the selling point. We look at the win ratio, which is 83.33%, and we can also take a look on the effective example since China. When there is an inverted hammer, it bounces up immediately. Also, there is a way to increase the accuracy. Candlestick can also be used with the support and resistance level simultaneously, and the chance of bouncing up will be more high and the forecast will be more accurate. Let's take a look on the Sense China again, and there is an inverted hammer appearing just above the support level, and the stock price bounces up in the consecutive following days. For the EMA, crossover requires the use of two EMA 9. Golden cross occurs when the shorter term EMA cross above the longer term EMA, and the dead cross occurs when the shorter term EMA crosses below the longer term EMA. We just use EMA for 3 times, and the win ratio is 100%. We can look at the effective example Sense China again. After the golden cross, the stock price keep going up. To balance the risk, EMA indicates the existing point for investors to minimize their loss. When there is a dead pause, investors should pay attention to the bearish signal, which can minimize your potential loss.
Thank you, Leslie. In the following part, I will talk about the Bollinger Bands. A Bollinger Band is used to help a trader determine where the market has gotten overextended in either direction. The region above the upper bound is the overbought region in which price is expected to drop. In contrast, the region below the lower bound is the oversold region in which price is expected to rise. This indicator has been used for 10 times and all are effective, so the win ratio of Bollinger Bands is 100%. From the graph, you can see that when the price went in the oversold region of Bollinger Bands, price went up later. When the price went in the overbought region of Bollinger Bands, price went down later. Traders should avoid using Bollinger Bands when there is a sudden strong new trend or the stock volatility is low, as it will give false signals. During these times, the stock price may penetrate to the upper or lower band, but it doesn't mean the price will turn to another direction later. Instead, it may keep going to the same direction. The false signal are commonly found in gap up opening that revert back within boundaries. Intraday trades, unexpected event. Bollinger Bands are better to be used when engulfing candles, RSI, support resistance levels, the Bollinger Band Y or W bottoms, and M tops as a buy or sell signals. Trader can reduce risk through using Bollinger Bands to determine oversold and overbought level, which provides buying and selling signal. It may be lot rise if traders enter a position with the price inside the Bollinger Bands, as the direction of price is quite uncertain. The RSI indicates overbought signal if RSI is above 70, whereas an oversold region is when RSI is below 30. The central line can also be used to predict change in trends. This indicator has been used for 26 times, 22 of which are effective. The win ratio of RSI is 85%. We can see when the RSI was below 30, the price went up later. RSI works well with stock price, move sideways within. Combining the RSI indicator with the Bollinger Band is one of the ways to further reduce the risk of trading. Since RSI shows momentum and Bollinger Band tells the main direction of market trends, so precise signals when traders should enter a position can be generated. MACD is used to identify moving average. This indicator has been used for 23 times, 17 of which are effective. The win ratio of this is 74%. We can see when there was a bullish signal line crossover, the price went up later as expectation. When there was a bearish signal line crossover, the price went down. It's better to combine the use of MACD with other technical indicators. RSI, Relative Figure Index, 20-period simple moving average, or some oscillators. For example, combining the MACD, AO, and RVI can reduce the risk of getting a false signal, and they provide a less confusing signal because the AO and RVI do not greatly deviate from the moving average convergence in terms of the reaction to price movement. MACD central line crossovers, divergence, and signal line crossover reduce the risk of loss, as trader can use MACD to analyze momentum, find trend following entries, or stay in trends until momentum is dying off.
Thank you, Nikki. First of all, I will talk about the use of gap. The gap indicates a segment of market. It is driven by news, and gaps will always be filled eventually. In our project, we have used full gap up as an indicator. And according to our analyzed result, it has been used for 1 time and it was effective. So let's look at the effective example, MTR. The full gap up exit. After the gap fill, which opened above the previous high, the uptrend begins. And to increase the accuracy, trader can use the moving average as an indicator to assure that it is an uptrend or downtrend following the gap fill. So to balance the risk, we can wait until the gap fill finish for the confirmation of the trend afterward. As some traders assume that gaps will eventually be filled so that those unfilled orders can be executed. Thus, we can use the bottom of the gap area as a support to set up a long position. If the stock price penetrates the bottom of the gap, it turns to an exhaustion gap, and therefore we should set the stop loss order slightly below the bottom of the gap. Second, the use of head and shoulder patterns. It is one of the most reliable patterns to predict trend reversal. It's composed by 4 elements: 2 shoulders, a head, and the neckline. And according to our analyzed results, the pattern has been used for 4 times and 75% were effective. Let's look at the effective example, AIA. The head and shoulder bottom has found. At the end of the right shoulder, the price followed the trend afterward. And the accuracy can be increased by using the volume to support the pattern. Compared to the previous 2 peaks, the volume of the right shoulder should be getting lighter. This would help to identify the point to break out. And to balance the risk, traders should combine it with some momentum indicators such as RSI to assure what the following trend should be. When the neckline is broken, we can follow the trend to set up a short position below the neck support. However, we still need to set up the stop loss at the top of the right shoulders. And for the use of double bottoms are occurred when the price goes extremely low and it touched the point to refresh a little bit, and then we test the original low. It results in a significant reversal after the second failure to testing the bottom. And according to our analysis result, it has been used for 1 time and it was effective. And let's look at the effective example, MTR. After the double bottom, it came with the uptrend after the gap fill. And we can analyze the double bottom with the volume. The trading volume can be used as the support to show the bottom is solid. And to balance the risk, the minimum price of relative speed depends on the height of the middle of the pattern. And traders should set the stop loss slightly below the bottom. If the double bottom is fake, we can stop loss immediately. And the use of wedges. It is a triangle pattern that both trend lines have the same direction. It is a single signal that there will be a trend established conversely to the direction of wedge. And according to our analysis, this pattern has been used for 3 times and they were 100% effective. And let's look at the example, HSBC. It was a falling wedge, which is a bullish pattern. And to identify whether it is the time for the wedge to break out, we can use RSI for confirmation. If RSI is in the oversold or overbought region and it cross back and it comes to the end of the wedges. And to balance the risk, in the rising wedge, if the lower trend line with steeper upward slope and the volume getting lighter and lighter but increases suddenly, it will be an alarming signal to suggest you to clear your long position of the stock, which can help us minimize the potential risk. To conclude, the above chart shows that EMA, Bollinger Bands, patterns are the most effective technical indicators during our trading period.
For behavioral bias, I would use tension as an example to illustrate this bias. First, herding bias. Before 31st March, most of the people believed Tencent stock price would go up. After the annual earnings release, we were influenced by the public and also believed Tencent stock price would rise. So we invested heavily and we lost in this investment. Second, overconfidency bias. We subjectively believe Tencent's price must rise after earnings release without analyzing thoroughly using the technical indicators. And due to this bias, we even look out our trading plan and invest more than 15% of our portfolio in tension, which increase our portfolio risk. And third, confirmation bias. When we make the decision to long tension, we only consider the information that is favorable to our preconception, such as the moving average and the basic tendency, which gave the buy signal, but neglected the other information, and which resulting to the poor decision making. And the last one, loss aversion bias. On 21st March, we bought the share of tension at 474.8. After last limited show the tension shares, we should sell the shares also. But we didn't sell it since we didn't want to suffer loss. And on 26th of March, tension closing price is 426.6, and there is a EMA death clause, but we still didn't sell it. And on 17th of April, at the end of the trading game, tension price was at 397.2, and we suffered 16% loss due to the loss aversion bias. And I will pass the time to Jeffy to talk about the limitation.
Thank you, Iris. We will now move on to talk about the limitations of technical analysis. Our group has summarized 4 limitations of technical analysis. Firstly, technical indicators deliver mixed signals. Some may give buy signals, others may give sell signals or neutral signals. Secondly, technical analysis may not be always correct. There is a probability that historic pattern failed to repeat itself. The next limitation is biased opinion. Even the same information is given to investors, they will perceive different information, thus making different prediction on price movement. Lastly, unexpected events, which may change investors' perception drastically, making current price conflict with prior prediction. In this example, we can observe 2 buy signals from basic tendency at moving average and 3 sell signals from candles, MACD, and RSI. We can therefore conclude it is a sell signal. However, the 2 buy signals may outweigh the importance of other sell signals under certain conditions, making our prior prediction incorrect. In this example, we can observe several buy signals in moving average, RSI, and MACD. However, the stock in the end becomes a sideways trend. This illustrates that technical analysis may not be always giving accurate predictions. Next, this example illustrated biased opinion. Both investors are given the same information, but one sees an upward channel while another sees a strong resistance level. Assume this happens in the market, the power of short sellers are offset by the power of long buyers, thus making technical analysis ineffective. Next, Naspers stock sell on Tencent is an example demonstrating the graveness of unexpected events. Unexpected events influence investors' expectation on the stock drastically. After the announcement, the stock price decreased a lot and moved against our prior prediction. After explaining various behavioral biases and limitations of technical analysis, we will move on and talk about ways that can make best use of technical analysis. The first one is to place weightings on technical indicators. We already know some indicators are more effective in strong trends while others are more effective in sideways. When we do technical analysis, we can place weightings on these indicators based on different conditions to improve the overall accuracy of our prediction. The second method is to place limit sell and stop loss orders. Limit sell orders can help us capture gain before a dip and prevent over-optimistic expectation. A stop loss order can help prevent loss from unexpected events and loss aversion behaviors. Another method is position sizing. If we can diversify our portfolio into several stocks rather than investing solely on a few stocks, our portfolio's idiosyncratic risk can be further reduced. We also suggest to use technical analysis with other analysis, such as fundamental analysis, which can help us to predict firms' future performance, and sentimental analysis, which can estimate the buying and selling forces in the market. My last suggestion is to act upon new market information. Monitor closely to new market information of individual stock and overall market condition. Adjust the price target, stop loss, and position sizing to maximize gain and minimize loss. This is the end of our presentation. Thank you.